So people have been sleeping on Bitcoin until...
Bitcoin surging back above 11,000, but is it back?
I think this thing is $100,000 a coin, and I think it is, in the next 20 years, $1 million a coin.
What is the story this time? Is it institutions actually getting in? Because that was a big hype story like a year ago.
Bitcoin gone wild this year with the crypto coin now up more than 100% after crashing from its all-time high back in 2017.
Well, what I think might be happening is an anticipation of a coming supply shock.
If this is your first time here, make sure you subscribe and click on the bell so you don't miss any new videos. For the first time in months, Bitcoin has broken out of the longest running bear market in history, and the valuation of the crypto market has increased by billions. People are running in the streets trying to figure out how to buy Bitcoin. The FOMO is getting real.
Bitcoin breaking above 11,000, a 15-month high, is notable because the cryptocurrency has only traded above 11,000 2.4% of its total days in existence. While the unveiling of Facebook's Libra has played a role in Bitcoin's comeback, it's worth noting that it was already up about 140% this year prior to the announcement. Others say Bitcoin's rise has less to do with Libra, which is designed as a means of payment for international money transfers, and more about the uptick in geopolitical tensions from Iran to Turkey to the US-China trade war. Data from Crypto Compare illustrates how international demand for cryptocurrencies has been on the rise in countries like China. Now, this is data based on volume in the last 24 hours. There's some discussion around whether there is a correlation between gold and Bitcoin. One portfolio manager telling me it's less about the correlation and more about investors trying to diversify smaller parts of their portfolio into other assets. Genesis Capital, which manages crypto funds for family offices and high net worth clients, says it continues to see more activity from institutional counterparties with volumes 2 to 3 times higher compared to 12 months ago.
Well, there's a couple things going on. So let's break down what the market's been anticipating. First of all, you're starting to get that long waited for institutional adoption. Fidelity is rolling out institutional custody. They're getting customers. People are starting to buy at institutions. Retail anticipation. We saw from TD Ameritrade. They invested in ErisX. They're going to start opening crypto trading, Bitcoin trading to their retail customers over the coming months, perhaps 3 to 6 months or so. People are anticipating that.
It's official. The crypto bull market is here. And if you're one of those perma bears who are still waiting for $1,000 Bitcoin, stand aside because the Bogdanovs have spoken. So what's next for Bitcoin? First, we need to talk about Bitcoin's market cycles, because while history doesn't repeat itself, it often rhymes. When it comes to investing, human emotions tend to oscillate between two extremes, fear and greed. The constant balancing act between the two creates a cycle of market emotions. For years, traders and investors have studied the cycle of market emotions with the help of a chart known as the Wall Street cheat sheet. It starts with hope, disbelief, optimism, and ends at the top of the market cycle with euphoria, a point of maximum financial risk. This is the time when investors think nothing can go wrong. More investors enter the market for its amazing returns, leading to a further rise in price, and valuations reach dizzying heights before eventually reality sets in. Complacency, anxiety, denial, panic, capitulation, anger, depression, and the cycle continues. The cryptocurrency market was fueled by euphoria in the last quarter of 2017. Bitcoin prices rose to $20,000 within 7 weeks on speculation that the launch of a futures market would open up floodgates for large institutions to buy cryptos. The bubble was popped just 2 weeks into January by a regulatory crackdown in China and South Korea, two of the biggest sources of demand for cryptocurrencies back then. Now, it's a well-known fact that all markets move in cycles, and crypto is no exception. The only major difference is that cycles in this market have been more compressed since Bitcoin is just 10 years old. There have been 3 major Bitcoin cycle peaks over the past decade, and analysts have been using them to predict the next one. The first cycle took 329 days to peak and occurred in 2011 when Bitcoin prices hit a high of just $32. A bear market followed, followed until the next peak, which came in 2014, with Bitcoin prices topping out at around $1,000. Then came the big downturn of 2014 when Bitcoin lost over 80% of its value, falling to below $200 per Bitcoin. The upswing took over 20 months to initiate and began in late 2015, leading us into the previous peak of just below $20,000 per Bitcoin in the third cycle of 2017.
What is the story this time? Is it institutions actually getting in? Because that was a big hype story like a year ago, and then it seemed to fizzle. Why do you think there's been a renewal in price, or is it just another up and down in crypto?
It's probably more the latter, but look, sentiment, the technicals look great. I mean, 80% drawdown in price happens, 3-4 times before? Every time that's happened, record highs. So as soon as you get the price going back up, animal instincts come back. But the difference between this increase in price versus the bubble in 17 is the infrastructure is much different. You have custodians now, you have trading software, you have compliance software. People were educated about the asset class. So this time is different. The sentiment has been fantastic. We just launched a big advertising campaign actually just before the price started going up.
The campaign's all really based upon, Barry, trying to get people to start seeing digital gold as gold and getting gold bugs into digital gold.
The ad is really designed to be provocative and start a conversation.
It's very entertaining,
yes,
by the way.
Yes.
I love trolling, and I'm a connoisseur of it. And anything that provokes gold bugs this way. Like, how many angry tweets did you get from gold people?
So this has already gotten over 1 million views, and it's actually just starting today, appearing on TV. So the commercials just started being broadcast today. Look, I think what's important is to start the conversation. There's a generational shift that's happening in the way that investors think about gold. So the younger generation, I grew up, I was born after the gold standard, didn't grow up during a period of war where you had to be able to store your money via something like gold. Younger generation, money is digital. Anybody who has a phone can now access this asset class. And so you have what is approximate $68 trillion of wealth being handed down from boomers to X's and Y's and millennials over the next 25 years. That's not going to stay in gold. It's not going to all go into Bitcoin, but whatever is in gold is certainly going to diversify into something else.
So what could be the major catalyst to trigger this epic price rise again? An event known as the Bitcoin halving.
Is it back? Like after 2018, the crypto winter, based on your experience, enthusiasm, are people ready to go at it again? Is it real?
Well, what I think might be happening is an anticipation of a coming supply shock in 2020. So what we're looking ahead to is a halvening event. The way that new Bitcoin is introduced to the market is through a process called mining, and the mining reward decreases by half every few years. And so in 2020, we'll have much less of a daily supply of Bitcoin than we do now. We'll have half less. And so while we're looking ahead to the halvening event and the supply shock, we're also seeing a greater demand for Bitcoin and new on-ramps from more familiar and conventional sources. So there's an anticipation that there'll be a broader group of consumers that have access and appetite for Bitcoin.
To keep it short, it's basic supply and demand. Every 4 years, a halving occurs that cuts the Bitcoin mining rewards in half, with the latest halving scheduled to reduce the reward from 12.5 BTC to 6.25 BTC. This process was intentionally built into Bitcoin to keep inflation of the cryptocurrency in check, while at the same time creating scarcity. Bitcoin is set to undergo a mining reward halving in May 2020, and historical data indicates the process tends to trigger a price increase at least a year in advance. Currently, Bitcoin blocks are mined every 10 minutes with a reward of 12.5 BTC. This means that each day 1,800 new Bitcoins are introduced into circulation. On May 24th, 2020, the number of Bitcoin created every 24 hours will be cut in half. Two previous halving events in 2012 and 2016 have been followed by large upside momentum, and it is expected that the 2020 halving will have the same effect on the price.
2012, I was introduced to it. I started to accumulate. 2013, I wrote an article, and I said, you know what? There's so much asymmetric upside here. This is a thing that either goes to, at the time I said, roughly the value of gold, And at the time, it was about $100 a coin. And so there's very little downside. There's all this asymmetric upside. I said, take 1% of your net worth and buy this schmuck insurance. And it's a schmuck insurance in this kind of very elegant, beautiful way.
I missed the schmuck insurance.
That was at $100, though. What would you, I mean, I actually started hearing from people that I know very well who don't often invest, who are now asking me if this is the time to invest.
Buy the schmuck insurance now.
Here's the thing. This is now a confidence game. This is a fantastic, fundamental hedge and store of value against autocratic regimes and banking infrastructure that we know is corrosive to how the world needs to work properly. You cannot have central banks infinitely printing currency. You cannot have folks with, misguided and misdirected monetary and fiscal policy to have the ability to hedge that out in a way that isn't fundamentally correlated to the people and the infrastructure that made those decisions that we were not a part of fundamentally, I think is a smart thing.
But the point is, if you haven't jumped on this bus or train or whatever vehicle you want to describe it as, has it left the station?
No. So here's what I would say. The same way that I said in 2013, put 1% of your net worth into Bitcoin, I will put myself out there today. I think this thing is $100,000 a coin, probably in the next 3 to 4 years. And I think it is, in the next 20 years, $1 million a coin. So there you have it. So if you have $100 to invest, what I'm saying is...
Put $1.
Put $1. And the reason that $1 is so valuable is that it is fundamentally not correlated to the other 99. And just on the off chance that all the people that manage the 99 may not totally know what they're doing, the $1 may actually save us all.
Billionaire Tim Draper is one of the most confident Bitcoin traders in the world. During an interview, he reassured the public that he is certain that Bitcoin will become more valuable than fiat currencies.
Crypto generally will replace all fiat because it's just better currency, and all the best engineers in the world are working on that. They're not working on how to improve services for the dollar. By the way, that's $100 trillion market. So that means that we have a long way to go in the crypto market. We're now in the hundreds of billions. It's got 1,000 times on what it is now to go. I think Bitcoin is clearly the leader, and it will be the standard by which all the other currencies will have to compete. It'll be the equivalent of Microsoft in software, that kind of thing. It's very likely that Bitcoin will be the largest and biggest currency because they have a network effect. It grows as the network grows.
Bitcoin bull Tom Lee says that the crypto winter is over and new all-time highs are likely to come by 2020.
And one Bitcoin bull says the crypto winter is over and spring has officially sprung. Tom Lee of Fundstrat Global Advisors joins us now. Break down why you've become even more bullish on the cryptocurrency.
Seema, as you know, last year was a terrible year for crypto, a massive bear market. There's 11 signs that historically only take place in a bull market. So I think the evidence is mounting that there's a bull market, but I think the few that really matter are things like on-chain blockchain volumes turned positive on a year-over-year basis in late January. Bitcoin crossed above its 200-day moving average on April 1st. It's a big technical hurdle to cover, and it hasn't been above its 200-day moving average for more than 13 months. And we surveyed OTC brokers. They're really important in terms of how institutional investors trade crypto. And universally, they've all talked about a 60 to 70% increase in activity levels, like number of clients, and the trading per client really taking off recently. So I think you're seeing signs that fundamentals are improving, technicals are improving, and then now there's real activity by essentially crypto hodlers.
This recent crypto recovery has been great, but we still have a very long way to go before we reach previous all-time highs. The key point is the recovery has barely begun. You aren't late to the party, so if you missed the last couple of months, don't sweat it. This pump was just the beginning. Be ready. Oh, and if Bitcoin's already gone parabolic by the time you see this, there's always altcoin season. If you made it to the end of this video, let me know in the comments if you're bullish or bearish on Bitcoin in 2019. Also, make sure you subscribe and like this video. Thanks for watching.